Hello everyone. So today we are going to start with the new unit, that is unit 6 on redemption of debentures. So in unit number 3, I guess we have seen how to what issue the debentures and what are the conditions that needs to be taken care of while passing the journal entries for or in case of issue of debentures, right? So today we'll look at how to redeem the debentures. So we already know what is the redemption mean, right? We have seen it in the preferences. So similarly, when we issue a debenture, so in case of debentures also, there's a maximum amount of I think there's a limit of 20 years up to which you can issue the debentures. So after that, you need to redeem the debentures. You cannot keep it for a long time. Clear? Okay. So now, what are the modes of redemption? See, in case of preference shares, we had what? We had fresh issue or use of the reserves, the free reserves, right? But in case of redemption, what are the modes available? First of all, we can pay it in lump sum. Whatever the debentures are there, we can pay the amount in lump sum, whatever the amount is payable. Then by payment in installments, I can also pay the amounts in installments for 10 year, 12 year, 13 year, 14 year, and so on. Then by purchase in the open market, what I can do is, instead of redeeming it through the company or paying the shareholders the money directly, what I can do is I can buy my own debentures. I can buy my own debentures. So in that case, I will pass the entry own debentures account debited, own debentures account debited to bank account. I have already a liability lying over there in my books, so I'll cancel this with the asset by passing the entry. What? By debiting the liability, that is 10% debentures, for example, 10% debentures account debited to own debentures account, that is the investment account. That is the investment account. By passing this particular entry, I will cancel off all the debentures that was bought by me. Clear? First of all, I will invest in my own debentures and then I will cancel it in my books straight away. Because on the asset side, I will have own debentures as an investment, whereas on the liability side, I will have the same debentures as a liability. So because of that, I can cancel both of them. Clear? Okay. Then going ahead, by conversion into shares. So these debenture holders, these debentures will also have an option of conversion. So we call it as convertible debentures. That means these can be converted into equity shares. They will have an option to convert themselves into equity shares after, let's say, 10 years, 5 years, or after 20 years. But we won't pay them the money. Or what we can do is, either we can convert some of them, let's say 60% is converted, whereas remaining 40% we pay them in lump sum. This can also be done. Clear? These are some of the modes of redemption of debentures. Then going ahead. So now let's look at the provisions, that is section 71 of Companies Act. What does section 71 of Companies Act talks about the redemption of debentures? Now, section 71 says that a company may issue debentures with the option to convert such debentures into shares either wholly or partly at the time of redemption. So, during the redemption, what the company can do is either partly or the whole of the debentures can be converted into equity shares. But provided that such debentures with option to convert into shares, wholly or partly, whatever it might be, should be approved by the special resolution. Should be approved by the special resolution passed at the duly convened general meeting. So basically, the shareholders, the equity shareholders, should agree to the same by passing a special resolution with 75% or more number of votes. Why is that? Because see, tomorrow if debenture holders are converted into equity shares, what will happen with the equity shareholders? Their percentage of holding will dilute. Their percentage of holding will be diluted. Because of that, we need to get the permission from the whom? From the equity shareholders, who are the final owners of the company. Clear? Okay. Then going ahead. Section 71 subsection 2. No company shall issue any debentures which carry voting rights. So company cannot ever issue any debentures which will carry voting rights. So basically, preference shares do not carry any voting rights, whereas debenture holders will also not carry any voting rights, because these people are the people are the lenders of the company. These people are not the owners of the company. Never ever debenture holders can be the owners of the company until unless their holding will be converted into equity shares. Clear? Okay. So only the voting rights will be with the equity shareholders. Then we have section 71 subsection 4. Section 3 is skipped because it is not relevant for your syllabus for now. So where debentures are issued by the company, then the company should create something called as debenture redemption reserve, DRR. The company should create something called as debenture redemption reserve. Out of what? Out of the profits of the company available for the payment of dividend. Once again, only the divisible profits or distributable profits as a dividend can be utilized towards creation of what? Debenture redemption reserve. But this reserve is not like your CRR. CRR is different and DRR is different. Remember this, clear? Okay. And the amount credited to such account should not be utilized for any other purpose other than redemption of debentures. Other than redemption of debentures, this amount cannot be utilized anywhere. Then when do we create this amount? I will tell you. See, let's assume. Okay, let's pass some journal entries now. So whenever we issue a debenture, what is the entry that you pass? Whenever you issue a debenture, entry will be bank account debited to something, let's say 10% debenture account. Why is 10% debenture account credited? Because whatever debentures we issue today will be a liability for the company, will be a liability. So we write it on the long-term borrowings in the schedule 3 format, right? So because of that, it will be a liability, and whenever liability increases, we will what? We will credit the account. Clear? And bank account is debited. Why? Because we are receiving the money. Whenever I issue a debenture, I am receiving the money. Simple. Okay. Then once the debenture is issued, what should I do? There are some steps to be followed. So first of all, creation of something called as DRR, debenture redemption reserve. So as I told you, it is a reserve. So basically that means the entry will be credited. Whenever I create any reserve, entry is debited. Entry is credited. Remember, redemption reserve account is credited. And debit what? The amount can be utilized from either your general reserve or from your P&L account, because these are the distributable profits that are available in the balance sheet. Securities premium, CRR cannot be used. Please keep it in mind. Clear? Okay. So from this I will. So how much will this be the amount? So this will be 10% of, or else let's do this. Let's make it 9%. Okay. So 10% of debentures that will be redeemed. Clear? How much ever debentures are going to be redeemed, on that value you will multiply 10%. Let us say out of all of this, 60% is converted to equity share, whereas remaining 40% will be redeemed. So on which amount will you create the reserve? On 40% only, not on the 60%. Remember, DRR will be created on the value of debentures that are going to be redeemed in the future, because that we know already, because this option of conversion into equity shares will be given while the debentures are issued. Whenever you issue a debenture, you give them the option to convert it into equity share or not. If they are agreeing, it will be converted or not, or else it won't be. So they will already know how much will be converted priorly. So because of that, you can create the debenture redemption reserve on spot once the debentures are issued and fully paid up. Clear? Okay. Then the next entry will be to create something called as creation of debenture redemption investment account, or debenture redemption reserve investment account. I can also call it as debenture redemption reserve investment account. So whatever debentures are redeemable, whatever debenture value is redeemable, let's say 40% or 60%, whatever it is. So that redeemable part, for that part to we should have sufficient money tomorrow. Let us say I am issuing these debentures for, let's say, 10 years. So what Company Act mandates is, what RBI or the Company Act mandates is that for certain kind of company, see in this case in your chapter, all the questions will be based on unlisted company other than AIFI, then NBFC or banking company. For these kind of people who are issuing the debentures, for them there's a mandate to invest some part of their amount that is going to be redeemed into some securities which are prescribed by RBI. That is there in the textbook. Please, you can just have a look at it. That won't be enough that won't matter for your examination. Clear? Okay. So how much to be invested, that I will tell you. So first of all, pass the entry for investment. So whenever I invest into any investment options, the entry will be debenture redemption reserve investment account debited, because it is an investment, and whenever I say investment, it is an asset, and whenever the asset value increases, because I am investing, so asset value increases, so it will be debited. Then so to what? How will you invest the amount? Through bank account. So bank account has been created, because bank goes out, asset reduces, we will create the account. Clear? Okay. Now how much will this be? This will be 15% of debentures that will be redeemed in the future. Clear? How much ever debentures are going to be redeemed on a future basis, of that value 15% will be invested somewhere. Then once the debenture comes for redemption, when the debenture is due for redemption, in that case, what entry you pass? You first of all sell out all the debenture redemption reserve investment. Whatever account you have created over here will be sold off. Okay. By the way, before selling it off, each year you will receive interest on that because we have made some investments. So on something we have to receive, right? So let's say we are receiving interest. So the entry will be interest. Sorry, bank account debited because I am receiving the money. I will write interest on investment. So bank account will be debited to what? To interest on debenture reserve, redemption reserve, investment account. Whatever investments I have done, on that I am receiving interest. So whatever interest I am receiving will be a income for me. And whenever income increases, we will credit the entry. And whenever I am receiving money, my asset value will increase. So therefore bank account is debited. Clear? Done. Next, this will be transferred to P&L account. What is the entry? Transfer to P&L. Transfer to P&L account. What is the entry? So interest on debentures will be debited. Whatever account you have opened will be debited to P&L account. Simple. Whatever passing entry I have told you in a single in the final accounts of sole proprietor, same entry will be passed over here. Okay, done. Now, once the debentures are redeemed, in that case, what to do? So first of all, whatever investments you have done in the debenture redemption reserve investment account will be sold off. Why? Because why was it created? Because for the redemption to be paid off with, right? We need some money during the redemption. So because for that purpose, I have invested some money somewhere because it will appreciate over the time. So now I will sell it off to pay it off to the debenture holder. So the entry will be, first of all, I am receiving the money. So bank account debited to what? To debenture redemption reserve investment account. Why? Because bank account I am receiving the money. Investment is sold off. So whenever investment value reduces, asset reduces, you will create the entry. Done. Okay. Next. Whatever debenture redemption reserve account you have created, right? Over here, remember 10% you have created, right? See this part. You have created a 10% reserve over here. This reserve has to be transferred to P&L account again. This reserve has to be transferred to either general reserve or P&L account. So we will transfer it to P&L account now. So the entry will be what? Debenture redemption reserve account debited. Because it was a reserve before, and whenever I am reducing the value in the reserve, the account will be debited. This I have told you before. To what? To P&L account. Clear? This is the entry for the transfer of debenture redemption reserve or cancelling out the debenture redemption reserve account with P&L account. Clear? Why am I doing this? Because the purpose for which it was created is no more relevant. Why? Because I am redeeming the debentures. I am taking back the debentures and cancelling it out, right? So because of that, whatever reserves I have created, against that there is no debenture now. So because of that, I will cancel this out by transferring whatever the value is there to the P&L account. Done? Okay. Next. Now the debenture redemption entry. What is the entry? 9% debenture account debited. Why is this account debited? Because debenture was a liability, and whenever I am redeeming it, the value in the books will reduce. When the liability reduces, you will debit the account. Okay. To what? To debenture holders account. Yes. Okay. If it is a premium, it will be a loss. So premium on redemption account debited. Okay. Then after this, now these debenture holders are to be paid off, right? So debenture holders account debited to bank account, just like your preference share, how you have passed the entry, the same entry will be passed over here also. Clear? Okay. Now this premium on redemption will be transferred to what? Again, P&L account. Clear? Okay. So we are done with the basic journal entries. Now let's look at the questions. Okay. Now the following balances appeared in the books of Paradise Limited, unlisted company other than AIFI, banking company, NBFC, HFC. HFC is basically housing finance company. NBFC is non-banking financial company. Banking company, you know already, Canara Bank, all those cases. AIF is basically All India Financial Institutions. Clear? Okay. As on 1/4/2021. So they have given us the opening balance of debentures, then balance of DRR account. That is my debenture redemption reserve account. Then DRR investment account also the balance has been given to us. represented by 10%, 1125, this is the worth of each bond, secured bonds of government of India of rupees 100 each. Now, this is the amount of investment, this is the rate of interest on that, clear? Okay. So annual contribution to DRR was made on 31st of March every year, fine. So whatever contribution was to be made to the DRR account has been made on 31st of March every year. So then on 31st March to 2022, the balance at the bank was 7,50,000 before receipt of interest. That means interest has to be received. That is on 10%. We have made some investments. On that investments, I will receive interest. Remember, the investments were realized at par. That means whatever value I have invested, on the same value I have received back at par for redemption of debentures at a premium of 10% on the above date. So that means on the above date, I have redeemed the debentures. I have redeemed the debentures at what? At a premium of 10%. At a premium of 10%. Clear? Okay. You are required to prepare the following accounts for the year ended 31st March. Okay. So let's start with debenture account. So all these accounts needs to be created now. So let's start. So first of all, debentures account. First of all, debentures account. How much percentage? Always mention the percentage. Please do not skip the percentage. So 12% debentures debit. Great. Now tell me, any entry on the credit side will increase the balance. Why? Because 12% debenture is a liability, and any entry on the credit side will decrease the balance because it is a liability. Clear? The rule for liability. Then, so opening balance is given to us. Opening balance will be for the liability on the which side? On the liability side. So buy balance brought down on the opening date. Buy balance brought down. How much is the value? 12% debentures. It is rupees 7,50,000. So 7.5 lakhs. Then the debentures are redeemed, right? Where will this amount be transferred to? Where will this amount be transferred to? To the what? To the debenture holders account. Debenture holders account, right? 7.5 lakhs. Done. Next account is what? DRR account. DRR account. It is debenture redemption reserve account. So for the reserve account, what is the rule? Reserves are similar to a capital, so that means again on the capital, on the credit side, whatever entry you pass will increase the balance, and whatever entry you pass on the debit side will decrease the balance. Okay, so now where will the opening balance be? What is the opening balance? The balance of DRR is rupees 25,000, right? So where will the opening balance come on? Credit or debit? Debit or credit? On the credit side. On the credit side. Credit side. So buy balance brought down on the opening date rupees 25,000. But how much to be reinvested again? How much to be put into the debenture redemption reserve account? How much? See, so we were supposed to redeem 7.5 lakh worth of debentures. Now, how much is the debenture redemption reserve should be maintained at? What is the percentage? It is 10%. But how much do we have over here? 25,000. So, first of all, 7,50,000 into 10% is how much? 75,000. But how much do we have? We have only 25,000 rupees. So, from where will I take the money? From where will I take the money? To create more. From where will I take the money? From the P&L account. So, by P&L account. By P&L account. How much? Rupees 50,000 extra I should add up. 50,000 extra I should add up. So, by the end of the year, how much will be there? Rupees 25 plus 50. That is 75,000. So my limit is reached now. Right? Clear? Okay. So, why did I pass the entry on the credit side? Because I need to increase the value of debenture redemption reserve account. I need to increase the value, and to increase the value I will credit the entry. Done? Yes. Make a small working note over here. Debenture to be redeemed is equals to 7.5 lakhs. DRR to be maintained. How much to be maintained? That is 7.5 lakhs into 10%. That is 75,000 less already maintained. How much? Rupees 25,000. So how much more is required? 50,000 more is required. Done? Yes. After this, what else is required? So we are done with these two accounts. Then DRR, investment account. Now DRR, debenture redemption reserve investment account. Debits, credit. Now what kind of a nature is this? Out of 5 heads, what is the nature of this? It is an asset. It is asset. So any entry on the debit side will increase the balance, any entry on the credit side will decrease the balance. So where will the opening balance be? So we have opening balance. Remember, we have opening balance over here of rupees 1,12,500 rupees. Yes. So I can just mention the name of the bond also, okay? Whatever the name of the bond is given to over here. See, 10% 1125 secured bonds of government of India. This also I can maintain over here. Now, the balance will be on the credit side, sorry, on the debit side, because it's the asset. Remember, by two balance brought down on the opening date. What is the value? Rupees 1,12,500. 1,12,500. One thing I forgot to mention is whatever you create over here is on the year end. Clear? This is created on the year end. That is 31st March of 2022, I guess. 2022. Yes. On this date you create this. Clear? Yes. Okay. Now what about the investment? Whatever investment reserve you have, as per the question, have a look. What they have told us. The investments were realized at par for redemption on the above date. Because I am redeeming the debentures now, I am selling off the investment. So whenever investment is sold off, what will happen? The value of the investment will reduce. So where will you pass the entry? On the credit side. As what? As by bank account. Rupees 1,12,500. Clear? Next account is bank account. Now come to bank account. Debits, credit. Okay. So on the debit side, any entry you pass will increase the balance. Any entry here on the credit side will decrease the balance. Now, first of all, opening balance of cash, of the bank was how much? Rupees 7,50,000 rupees. So, two balance brought down. Rupees 7,50,000. Okay. So after the balance, what else we have received? Remember, what else we have received? As per the question, just have a look at the question. So, what have we received? So, they have mentioned that the balance at the bank is how much? 7,50,000 before receipt of interest. That means we have received interest at the year end. So, on 31st of March again, we have received interest. So, whenever I receive interest, the bank balance will increase or decrease. The bank balance will increase. So, whenever it increases, we will what? We will debit the entry. So, the entry will be to interest on debentures, interest on investment if I write. Investment. How much? Rupees 1,12,500 was the investment value. Remember, on that 10% is the interest. So, into 10% for the whole year. So, 1,12,500 into 10% will be what? 11,250. This is the first entry. Then, we have sold what? We have sold the investment. Remember, we have sold the investment and we have received what? Cash or bank amount. Right? We have received the amount in the bank account. So, this amount will be transferred to what? The debit side of the bank account, because the bank balance is increasing, and whenever the bank balance increases, we will debit the account. Right? So, to DRR investment account. How much? Rupees 1,12,500 rupees. Then, okay. Now, we have paid off the debenture holders. Right? So, whenever I am paying off the debenture holders, I should pass the entry for the payment. Okay. The entry will be what? By debenture holders. How much will I pay? Will I pay at par or premium? As per the question, the redemption was done at premium of 10%. How much debentures do I have? Rupees 7,50,000 worth of debentures. At what premium do I redeem is 10%. So, the total value of redemption will be 7,50,000 rupees plus 10%. How much will that be? 7,50,000 plus 10%. That will be rupees 8,25,000 worth of debentures has been redeemed. I have paid off. Now find out the new balance in the bank. 7,50,000 plus 11,250 plus 1,25,500 minus 8,25,000 equals to 48,750 rupees is remaining in the bank account. So this will be taken as what? By balance carried on. See, for remaining account there is no balance carried on. Why? Because see, we have closed it over here by selling it off. Then here also we have transferred all the amounts to what? To the debenture holder. So no closing balance. Then again over here, do we have a closing balance? Yes. But where will this be transferred to? Once the debentures are sold, should the balance remain in the account? No, it will be transferred to what? To the P&L account. So again, to general reserve or P&L account, whatever it can be, right? So to P&L account, rupees 75,000. During what? During the debenture redemption. Once the debentures are redeemed on the same date, you will transfer this amount to what? To the P&L account or the general reserve account. Clear? Okay. Then the last account will be debenture holders account. So bank account is done. So last account will be debenture holders account. So go back. Debenture holders account. Where is the account? debenture holders account, debit, credit. What will debenture holders be considered as out of my 5 heads? These people are considered as liability. Remember liability, because we need to pay them back. We will keep it due first and then we'll pay it off. So any entry on the credit side will increase the balance, any entry on the debit side will decrease the balance. So because of that, now how to pass the entry? So do they have a opening balance? No. First entry will be what? First entry will be from here. This entry will be transferred to the credit side, right? To increase the balance to be payable to them. So what? To 12% debentures, right? What are the percentages? 12%. So by 12% debentures, how much rupees? 7,50,000. Then they have to be paid what? With premium. So I need to increase the balance now. I need to increase the balance more because I am paying them with what? Premium of 10%. Right? So by premium on redemption, how much? Rupees 7,50,000 into 10%. That is 75,000. Right? Okay. Now how will this be paid off? To bank account. I am paying it off. When I pay the liability off, the liability reduces, and whenever the liability reduces, we will debit the entry, right? So by how much? Rupees 8,25,000. Right? The same entry has been passed in the bank account over here on the credit side. Rupees 8,25,000. Then so by this we are done with the ledgers. Okay. In the examinations they might not ask you the ledgers. They will straight away ask you to prepare the journal entries. Okay. But this was the main question. That is there are only 2 questions in the textbook. So I have solved one for you. The remaining one is for your homework. Clear? Okay. Next. So now let's look at the next illustration. That is illustration number 4. The balance sheet of BEE Co Limited, unlisted company other than AIFI, banking company NBFC and HFC, as of 31st March 2021 is given to you. Okay. So shareholders fund, reserves and surplus, long-term borrowings. Okay, let's look at the notes. So issued capital is how much? 20,000 shares of rupees 10 fully paid up. Then we have P&L account rupees 1,20,000. Then debentures are issued already rupees 1,20,000. Okay. And cash and bank account balances are given to us. Okay. At the annual general meeting, it was resolved to give existing equity shareholders option to purchase 1 rupees 10 share at rupees 15 for every 4 shares held prior to the bonus distribution. This option was taken up by all the shareholders. That is what? This is what? Right issue. Right? Right issue option is given to us. So for every 1 share, how much is given to you? Sorry, for every 4 share, 1 share is given to you. Right? So 1:4 will be the right issue ratio. Right issue. Okay. But at what rates are this given to you? At rupees 15, not rupees 10, but rupees 15. That means 5 rupees is what? 5 rupees, because see, 10 rupees is the nominal value of each share, and this rate share is issued at rupees 15. It means 5 rupees is a securities premium. Okay. Now to issue 1 bonus share for every 5 shares held. So bonus has been declared. After right issue, bonus has been declared. At what ratio? 1 bonus share for every 5 shares held. Right? Okay. Now next. To repay the debentures at a premium of 3%, the DRR investment realized as per the book value. So any DRR investment given over here? No. See, as per the question, they have not given us the DRR. They have not given us the DRR investment account also. So that means we need to pass the entry first for all these things at a 10%, at 15%, and after that we need to redeem it back. Right? Clear? I mean, we need to sell the debenture redemption investment account. Then we need to reverse the debenture redemption reserve, right? Okay. So let's start. First of all, let's start with the journal entries. So first entry for right issue. Share application account debited, or I can say bank account debited. Account debited. 2 share capital account. But this time we have what? We have premium over here, right? So 2 securities premium. Since premium is the income for us, additional income. Because of that, we will credit the account, or I can say that it is a reserve. Better than income, take it as a reserve. It is a reserve. Because of that, I will credit the account. Whenever we need to increase the value of reserves, we will credit the account. Remember this. Now, amounts. Okay, coming to amounts. But before the amounts, how many equity shares are issued? So the ratio is what? 1:4. How many equity shares were already issued? 20,000 equity shares were already issued, right? So because of that, 20,000 equity shares, I will just mention it over here only better. So 20,000 equity shares into 1 by 4, that will be how much? By 4 means 5,000. 20,000 by 4, 20 by 4, 5,000 is. So 5,000 new right shares will be issued. Do we have the space? Do we have the space to issue it? Yes, see over here. 25,000 will be the new issued share, right? 20,000 plus 5,000 will be the new issued share. So 5,000 shares are issued. So the total amount will be 5,000 into 15 per share. How much will that be? 5,000 into 15 equals to 75,000 we have received in the bank account. Okay. Then 5,000 into 10 per share will be the nominal value. So 50,000 rupees over here, and then 5,000 rupees into 5 rupees per share will be the premium charged on that. So that will be 5 for 25. So 25,000 rupees. Clear? Second entry. Then we have done what? We have issued bonus over here at the ratio of 1:5. So what is the new equity share? Existing equity. Existing equity. It was 20,000 shares before plus right issue of 5,000 shares. Remember, that will be 25,000 equity shares are there. After that, we have issued bonus in the ratio of what? In the ratio of 1:5. That will be how much? 25,000 into 1 by 5. That will be 5,000 again. Sorry, 5,000 again. So 5,000 more shares are issued. So do we have the space? Do we have the space over here? Authorized capital is 30. So 20 was the issued share plus 5,000 is the right share plus 5,000 is the bonus share. So that means we are up to the mark, right? Up to within the limits we have issued all the equity shares. So no need to change or alter the authorized capital. So let it be as it is. Done. So now coming to the bonus entry. First of all, capitalization of the reserves, right? So first of all, taking out the reserves. What reserve can I take? So do we have securities premium? Yes, we have securities premium. Remember? So first of all, use this amount. How much is required first of all? Into 10 per share. That will be rupees 50,000. That will be rupees 50,000 rupees, right? So what I can do is from securities premium account I can use 25,000, and from P&L account I can use how much? 25,000. Clear? Okay. So the entry will be the second part. Securities premium account. See, I have told you, because securities premium do not have many use cases, because of that I will first prioritize CRR account, then I will prioritize securities premium, and then I will go for P&L, and then I will go for general reserves, right? Okay. So how much from this? 25,000 from this. Then from P&L account, how much will I use? P&L account debited, how much will I use? Again 25,000 I will use, because I need 50,000 rupees, right? See, 5,000 new bonus shares are given at rupees 10 each. Always it will be issued at a face value only, not at a premium. Then we have the rupees 50,000, that is the value, right? So to what? To bonus to shareholders account. Rupees how much? Rupees 50,000. Next entry. And third. Then we will transfer this and capitalize it, right? So bonus to shareholders account, whatever the account was created, I am reversing it right now. To what? To what? To share capital account. To share capital account, rupees 50,000. Rupees 50,000. Done? Yes. Now, after this, two entries are done, right? This is done. This is being taken care of. This now. So to repay debentures at a premium of 3%, the DRR investment realized at the existing book value. Okay, now what we'll do? First of all, let's create DRR account. So to create DRR, what should I do? To create DRR, what should I do? So to DRR account. From where will this account be created? From the P&L account. Account debited to DRR account. How much is the value? First of all, check how much debentures will be redeemed. Debentures are at rupees 1,20,000. So 1,20,000 into 10%, because 10% should be the DRR. Remember? So 1,20,000 rupees into 10% is the value. So 1,20,000 into 10%, that is rupees 12,000. Rupees 12,000. Then after this, then we have what? We need to invest some amount, right? So DRR investment account. It is an asset account. Remember the entry I have taught you before. Investment account debited. The payment will be done through what? Through the bank account. to bank account. How much is the amount? Again, rupees 1,20,000 into, what is the percentage of investment to be made? What is the percentage of investment to be made? 15%. So that will be how much? Rupees 1,20,000 into 15%. That is rupees 18,000. Rupees 18,000. Done. Okay. Now next entry will be forward for the redemption. Sixth one. Now we will redeem the debentures. So whatever debentures we have, what is the value of debentures? 12% debentures, right? So 12% debentures account will debited. Why? Because it was a liability before, and whenever liability reduces, we will debit the account. So debenture account debited to what? To debenture holders account. Debenture holders account, just like preference shares. But in this case, there is a premium. Remember, there is a premium of 3%. Since premium will be an expense on redemption, so it will be debited because it's a expense. Expense increases, debit the account. Premium on redemption of debenture account debited. Okay, what is the value of debentures? Rupees 1,20,000. So rupees 1,20,000. Then what is the value of premium? So on 1,20,000 rupees, 3% is the premium. Remember, see. 3% is the premium. So 1,20,000 into 3%, that is rupees 3,600 is the premium. So how much should be payable to the debenture holders? Rupees 1,23,600 rupees is payable to the debenture holders. Clear? Okay. Now after this, seventh one, I need to sell off the investments, right? Whatever investments I have made over here, I need to sell it off. And as per the question, the DRR investment is realized at par as per their existing book value. So that means there is no increase or decrease in the value of investments. So whatever amount I have invested, same amount is received back. So the entry will be bank account debited. Why? Because I am receiving the payment. I am receiving the amount once I sell my investments. Debited to debenture redemption reserve investment account. How much was invested? Rupees 18,000. Rupees 18,000 was invested, same has been sold off. Next entry. Whatever debenture redemption reserve you have created over here, is it required? No sir. Why? Because the debentures are sold off. The debentures are redeemed now. Since there is no debentures, why to maintain DRR account now? So I need to reverse it off. How? By reversing the entry. Simple. So DRR account debited. RR account debited to what? P&L account. Rupees 12,000. Done. Okay. What else is remaining? These debenture holders account is yet to be paid off. Right? So how to pay it? Again, same like your preference shares. Debenture holders account debited. It was credited before. Now I am debiting it again to reverse it off to bank account, because I am making the payment, so the bank account will be credited. Right? How much is the payment to be made? Rupees 1,36,000. 1,23,600. 1,23,600 rupees is to be paid off. Done. You're good to go. Clear? Okay. Next, let's go to the next question. This question is from your practical questions. Okay. A company has issued 20,000 debentures, 13% debentures, 20,000 debentures of 13% interest of rupees 100 each on 1st April to 2021. The debentures are due for redemption on 1st July 2022. Okay. The terms of issue of debentures provided that they were redeemable at a premium of 5%. Okay. For 5% premium, I need to redeem it. Okay. And also conferred an option of the debenture holders to convert 20% of their holding to equity shares. That means out of all these debentures, 20% can be converted to what? To equity. Remaining 80% will be what? Redeemed in cash. Clear? Okay. Equity shares. Nominal value will be 10 rupees at a price of rupees 15 per share. So once they convert, if you want to convert your debenture to equity shares, how much is the value of equity share you receive? Rupees 15. That means you will receive less shares. Why? I will tell you. Debenture holders holding 2,500 debentures did not exercise the option. So that means out of 20,000 debenture holders, 2,500 debenture holders did not exercise the option. So that means remaining people did. Calculate the number of equity shares to be allotted to the debenture holders exercising the option to the maximum. Okay, now let's see what to do with this. So first of all, debentures issued. How much is it? 20,000 debentures are issued. So out of this minus 2,500 debentures. Why did not convert? These people are not willing to convert their debentures into equity. They want the payment in cash only. So less 2,500 debenture holders. So how much will that be? 20,000 minus 2,500 debenture holders. That will be 17,500 debenture holders. Now out of this, that means all of these people have agreed to convert their debentures, agreed to convert 20% of the debentures into equity, and the remaining 80% will be paid off in cash. So how much is 20% of this? 20% of above to be converted to equity. How much will that be? 17,500 into 20% will be 3,500 debenture holders agree to convert. Now, how much is the value of these debenture holders? Value of these debentures. So, rupees 3,500 into what? How much is the value? So, these are convertible at what rate? At 15 per share. The debentures are redeemable at what? Premium of 5%. So, this premium has to be given to the people who are converting their options to equity also. Converting their debentures to equity. So, because of that, how much will the value be? Into 15 rupees. Why? Because, see. Not 15 rupees, it is 105 rupees. Why? Because in simple terms, 100 rupees is the debenture value. 100 rupees is the debenture value. Plus, what is the premium? 5% is the premium on redemption. So, plus 5% will be equals to how much? Rupees 105. Clear? So, 3,500 into 105 will be equals to how much? 3,67,500 is the value of debentures that are being converted to equity shares. Now, find out how many equity shares will be issued to them. How many equity shares to be issued to them? So, to find out that, equity shares to be issued at a premium of how much? 15 per share. So 5 rupees is the premium, right? Because the face value of share is how much? 10 rupees. So they will receive how many shares? 3,67,500 rupees divided by rupees 15 per share. So how much will they receive? They will receive 24,500 equity shares. Done. They will receive 24,500 equity shares. Okay. Now I have told you that they are at a loss. Why? Because they are being given equity shares at a premium. Let us say they were given the equity shares at par. In that case, what will happen? See, 3,67,500. If they are given equity shares at par, that is rupees 10 per share, how much equity shares will they receive? They will receive 36,750. But how much are they receiving now? 24,500. Because of this particular premium of rupees 5 rupees, they are receiving less shares than comparatively if it was issued at a face value or the nominal value. Clear? Okay. This is not required. Okay, this is the answer. Okay. Now look at the next question, that is question number 2 from your practical question. Libra Limited, a listed company, recently made a public issue in respect of which the following information is available. A. Number of partly convertible debentures issued of rupees debenture is to 2 lakh. Face value and issue price is how much? Rupees 100 per debenture. Then convertible portion per debenture is 60%. That means it is a partly convertible debentures. That means only 60% can be converted into what? Into equity shares. Then the date of conversion will be what? On the expiry of 6 months from the date of closure of issue. Okay. So date of closure of subscription list is what? 1/5/2021. Then date of allotment of this debentures is how much? On 1/6/2021. Then the rate of interest on the debenture is 15% payable at the date of allotment. 15% payable from the date of allotment. So from this date onwards you can pay off what? The interest on debentures. The value of equity shares for the purpose of conversion is 60 rupees or with a face value of rupees 10. That means what is the value of securities premium? Rupees 50. 60 rupees I am issuing the shares, out of which 10 rupees is what? Face value or the nominal value. Rupees 50 is what? My securities premium. Okay. Number of debentures applied is how much? Okay, fine. So everything whatever we have issued is being applied for. Then interest is payable on debentures half yearly. That means on a 1 year, in 1 year, 2 times I am paying it. When? On 30th September and 31st March. So half yearly on 30th September and on 31st March. 2 times I am paying the interest. Write the relevant journal entries for all the transactions arising out of the above during the year ended 31st March 2022, including cash and bank entries. Okay. First of all, we will design the time frame. Let's start. So on first of all, on 1/5/2021, what has happened? On 1/5, what has happened? Closure of subscription, right? Or I can write closure of issue of debentures. Then on 1/6, it's the date of allotment. 1/6/2021 is the date of allotment of debentures. Date of allotment of debentures. Then after this, so then what has happened? So on 30th September, what has happened over here? We have paid interest, right? First interest we have paid. So on 30th 9/2021 we have paid half yearly interest. So I will mention half yearly interest. Half year interest paid. Now before that, see over here 60% is converted on what date? On expiry of 6 months from the date of closing issue. So when is the issue closed? On 1/5/2021. So when is the 6th month? So 5, 6, 7, 8, 9, 10. That means on 30th of October or 31st of October, 31st October 2021, converted 60% into what? Into equity. Okay. Next, after this, what has happened? Next, what has happened on 31st of March? On 31st of March, we have been paid the dividend. So, sorry, the interest, the remaining interest, right? 31st March 2022. Again, half year interest. Interest is paid. Fine. Let's see. So one more thing you remember. See, I have told you like for all the questions it was unlisted company, right? So for a listed company, there is no requirement. To create DRR. DRR is not required to be created. Only 15% DRRI investment is enough. DRR account is not required to be transferred from the P&L to DRR. Again, after the redemption, DRR to P&L account not required. It is not required. Clear? Only the DRR investment account is required. That too for 15%. That too for 15%. Clear? Okay. Now let's pass the entries. So first entry for debenture issue. So on what date? On 1/5. We have received all the amounts. We will assume we have received all the amounts. So on 1/5/2021, bank account debited to debenture application account. How much is the amount received? On 2 lakh rupees 100. So on 2 lakh debentures rupees 100, that is 2 crores. So I will just write it as 200 lakhs. Same thing, right? 200 lakhs. Okay. Next, after this, next on 6th, what has happened? Date of allotment. Okay, so whenever the allotment is done, I am transferring it to a liability account, right? So on 1/6/2021, debenture application account debited to what? To what percentage? What is the percentage of interest? 15% is the interest payable. So 15% debentures account. It is a liability account now. Debentures account. Okay. Rupees 200 lakhs or 2 crores for that sake. After this, next what has happened? On 30th of November, we have paid interest, right? But before that, we need to create an investment account, right? So on 1/6 again, whenever the investment, whenever I am transferring or allotting it to the debenture holders, on the same date I need to create what? DRR investment account. To what? To bank account, because I am paying for the investment. Now comes the question, what is the amount of debentures on which I should create the DRR account, DRR investment? See, I have told you that DRR investment will be created for the redemption shares, redeemed debentures only, or the redeemable debentures only. Redeemable in what form? In cash form. So out of this 200, 60% will be equity, right? Remaining 40% will be what? Will be towards cash or the redemption, right? So because of that, 200 lakhs into how much? 40% into 15% investment is required. Same 15% what we discussed before, right? Okay. So 40% portion will only be redeemed in cash. So because of that, 200 into 40% into 15%, that is 12 lakhs, or I can say 12 lakhs. Yes. Next, after this, again what? Now interest. Okay. Now let's go for the interest part, because all the entries up till 1/6 are done. So now interest is to be paid. First year interest to be paid, right? So on what date? 30/9/2021. So interest is paid. So that means interest is the expense to us. So interest will be debited. Interest on debentures account debited. On debentures account debited to bank account, because I am paying the amount, right? So to bank account. Okay. Now comes the question. How much is the interest? On what amount will you pay the interest? On complete 200 lakhs, because this is the amount due to us, right? This is the amount. See, once you convert the debentures into equity, at that time for that conversion, don't pay the interest. Only pay the interest for the debenture part. But on this date, are the debentures converted to equity shares? No, sir. Why? Because the conversion date is what? When? On October end. But we are on what date? In September end, right? So because of that, we need to pay the interest for all the debentures. Now comes the question, for how many months? So interest has to be paid from what date? Payable from the date of allotment. When was the allotment done? On 1/6/2021. On 1/6/2021, right? So 6, 7, 8, 9. So for 4 months only I need to pay the interest. So interest at the rate of 15%. So 200 into 15% into 4/12, because for 4 months I am paying the interest on a half yearly basis. Please do not multiply. Please do not simply multiply with 15, because 4/12 is required. This time weight is required because you are paying half yearly interest. Remember in this question. Now how much will the interest be? 200 into 15% into 4/12. That is 10 lakhs. 10 lakhs is the interest being paid. Okay. Now next, conversion of 60% holdings. Now on 31st of October, you are converting 60% of 60% of debentures into equity shares. So what to do? So the date will be 31st of October 2021. So conversion. So when I convert debentures into equity, that is this debenture will go off, right? So how much? 12%. No, what was the rate? 15%, right? No, sorry. So whatever 15% debentures we had will be reversed now. Debenture account debited to what? To what? To what? To share capital. Okay. By the way, are these debentures redeemable at a premium? Let's see. Let me erase this all. Okay. So value of equity share for the purpose of conversion is 60 rupees at a face value of 10. So that means whatever equity shares they are receiving, it is at a premium. So that means we are supposed to take premium over here. So to securities premium account. This is rupees 10. This is rupees 50, because total value is rupees 60. So 50 plus 10 will be 60. Okay. Now this is rupees how much? So for this, what we need to do is, how much is the debentures that we have received? How much debentures will be converted? Out of 2 lakh debentures, 60% will be converted. So it will be 1,20,000 debentures into rupees 100. Agree? Okay. So into 100 will be how much? 120 lakhs worth of debentures will be converted. So now it will be converted into equity share of rupees 10 and rupees 50. Now first of all, find out the equity shares receivable. Equity shares receivable, just like your previous question we had solved. How to do it? So 120 lakh was the value in rupees, divided by rupees 60 per share, per equity share. How much equity shares will you receive? 120 divided by 60, that is 2 lakhs. 2 lakh equity shares will be received. 2 lakh equity shares will be received. Equity shares will be received. Right? So now 2 lakh into 10 will be how much? 2 lakh into 10 will be how much? Rupees 20 lakhs. Then 2 lakh into 50 will be how much? 2 lakh into 50 will be how much? Rupees 1 crore. So 100 I can write. So 100. So is it matching with 120? Yes. So that means our entry is perfect. Next what has happened? After the conversion is done on this date, then we have paid the interest directly, right? So on 31st of March 2021, again interest on debentures account debited to bank account. Now comes the question, how much interest to be paid? Because see, if you see over here, see, last interest was paid on what date? On 30th of 9. But the conversion was done on what date? On 31st of October. That means for 1 month, for 1 extra month, we have to pay them the interest, right? For these debentures. So make 2 bifurcations. Make 2 bifurcations over here. Worth of 200 lakhs, make 2 bifurcations. 60% that are converted, 40% that are not converted. So for this, we need to give interest for how many months? For 1 month. For 1 month. When? From September end till October end. For these people, you have to give the interest for the whole 6 months, because these are not converted. These will be redeemed on cash basis, right? So 60% of 200 will be how much? 200. So simply you can do 200 lakhs into 60% into 15% interest into 1 by 12. How much will this be? 200 into 60% into 15% interest into 15% interest. Just a minute. Into 0.6 into 15% interest into 1 by 12. Sorry, not 1 by 2, 1 by 12. Into divided by 12. That will be rupees 1.5 lakhs. Okay. Then over here, again, 200 lakhs into 40% into 15% interest into how many months? 6 by 12. How much will that be? 200 into 40% into 15% interest into 6 by 12. That will be how much? Rupees 6 lakh. Okay. So how much the total interest payable? 6 plus 1.5 is 7.5 lakh interest is payable. So 7.5 lakhs, 7.5 lakhs is the interest payable. Then yes. So we are good to go. But one thing I forgot to mention previously. Okay. In this question, so there was a premium, right? I forgot to write off. So just take it down. This premium on redemption, whatever was there, has to be written off, right? Just like your preferences. Where will you write it off? So 10th entry. So debit. Sorry. This premium has been debited. So reverse it off by crediting it to premium on redemption of debentures. That is how much? Rupees 3,600. Debit what? Debit P&L account. Just like your preferences, you can use P&L account, but you cannot use securities premium. Remember, clear? You cannot use securities premium over here. Okay, fine. So we are done with this chapter on debentures. Okay. So basically, that means we are done with all the syllabus that was there for your foundation accountancy, right? So now, what is your responsibility? Your responsibility is to study. First of all, whatever questions are there in your textbooks, all those questions are really important. So please go through all of them. Clear? Then mark the questions. See, I will tell you how to revise. So once you are going through all the questions, look at all the questions. Do not skip any question. Okay, whatever questions you have, please drop the doubts in your Telegram channel. I will try to solve it. So the step will be, first step is to mark the questions which are really important. What happens is, for examinations you will have only 3 to 4 days. For accountancy you have 3 days. Example. So in 3 days you cannot read all the questions. So mark all the important, very important questions. This is the first step. Second step, go through all the following. So once your study material is done, so go through all of this. Whatever workbook we provide you, then whatever RTPs are released by ICAI for your attempt, ICAI will receive all the RTPs. That is the revision test paper for every attempt. One RTP will be released for one subject. So go through that, because the RTPs will have some beautiful questions to solve. Then next, go through the MTP of this year, of whatever attempt you are attempting. For every attempt, I think for foundation there are 3 MTP papers. That is the mock test papers that is released by ICAI. Please go through all of them. They will be with answers. So go through all of them, because ICAI sometimes has the habit of asking questions from these two parts. They will repeat some questions. Don't worry. They will repeat some questions. At least one question will be repeated. It should not be that you are going to the exam hall and you look at the question and you're like, oh, I should have studied this question. Okay, so that should not be the case. So because of that, please refer all of this thoroughly. In the workbook, however, you will always have all the past year question papers. So depending on that, please again do the same thing. Mark all the important questions over there also. Once you are done with all of this, you can be really thorough with the subject. Then go again back to your study material, because from study material generally the questions will be asked from your study material. People do not refer study material. That is the main issue they do. They just skip the study material and just go. Remember, always remember, your ICAI study materials are your holy book, whatever Bhagavad Gita, Quran, or whatever you prefer, Bible. So please keep the study material at the top priority. Then goes your RTP, then goes your MTP. Here, so please do not neglect all of these things, because these are all the free resources given to you people. So please do not neglect this. Clear? Okay. So basically, time all of the study that you want to do. Yes. Thank you.